It's Pow Pow. I hope you guys are doing well. Um, Hopefully, if you caught my live stream that happened earlier this morning, you would have seen where this probability cone would have played out to. But what we're doing now is we are targeting a whole bunch of regions, monthly mean. So I'll switch that on. As you can see, these yellow lines, we're targeting those yellow lines, and you're looking for opening closes above yellow lines for continuation into the next day. So what we did observe was last night we said price actions wanting to come back to this month to the new week. This morning what we observed is we saw that price action wanted to come back to this weekly mean, which is just printed here. So if I take this data off, what we're going to see is naturally you close above 3615, you're looking for continuation to the upside. Anything that's going to negate this will be coming off of my reverse wave trend, and that will be coming off of to the downside. So you start to get squeezed short once you start closing below said mean reversion point on the reverse wave trend. Okay, what's keeping our current price up here is our weekly mean. Our weekly mean I treat as like magnets. Okay, so whenever it prints, that's where it wants to go. So for example, if I was to switch off the probability cones, what we can see is that this is our monthly mean all the way down here. This is our previous weekly mean. So it's not that the market was manipulated, it's just that it wanted to go retest previous points of data. It's that simple. It's on the money over here. You want to close above your monthly mean, which, to be honest, we've been fighting well below for a very long time, okay? So in order to close above your monthly mean, you will look for continuation up and out of here on the 21-day time frame. Okay, so let's see if we're going to get a little bit of continuation or downs. Where we're going. This is what we're going to look for. Are we going to visit the daily mean, which we haven't visited today, which to me I'm going to put a 60% weighting on to say yes, just off of looking at these charts. Okay, monthly mean is down here. Monthly mean is luckily in a place where you can set future bull div, so it'll be something to note. If you fail this region or fail up here, you can rip it into the monthly mean to set a bull div on the higher term time frames and pick yourself up out of here. So what we're going to go have a look at now is we're going to go have a look at wait for mean reversion. Alright, so 15-minute is saying, let's say a close above the weekly mean, 3591, you will have natural mean reversion to the upside. What we have coming through here is the possibility for positive drift, right? Obviously, if this candle gets too big, it's going to be harder to set in that positive drift. But the general idea being is the next candle closes above said red line here, you will trigger sideways or positive drift. Positive drift will get you up to 3640 and furthermore our 3704. Alright, let's go look at the 45-minute. I'm going to cut out a whole bunch of other time frames just because this needs to be done right. Close above weekly mean confirms, so in 4 minutes time, close above weekly mean, confirm mean reversion to the upside with positive drift coming in the book, looking for a new trend. So let's just go zoom out, see what our return oscillator is doing. That's going to set in a, is that a normal div or is it even a div? It just looks strong to me. Alright, that's going to look pretty strong to me if we close above the weekly. If we close above the weekly mean, we're definitely going for 3704. Alright, let's start to see what's going to negate that, and then we're going to pop it on to expansion to the upside, looking for a new trend. Close above weekly mean, 3593, continuation to the upside. Close below that, negative drift. Let's see what's going to hit negative drift. So there's a bunch of positive drift from low time frames to higher term time frames. It's going to be hard to turn around. Expansion here. So you have 6 hour print. The first one's going to go through. So we can expect 6 hours sideways, waiting for Pearson correlation to also mean revert. When Pearson correlation, bottom right mean reverts, we will confirm a trend into 3704. Okay, but until then it'll be sideways and people looking to get filled in that region. Next, close above weekly VRE level and you'll have confirmed denied mean reversion to the downside with a general div, bull div forming. That's cool. Sideways on the 12 hour, which is double the 6 hour, so it's not that we're confused, we can just see what's happening here. Contraction, 12 hours not looking so good in the sense that it's mean reverting, but same thing applies. If 12 hour closes above VRE weekly mean, you will see that get denied bearish mean reversion to the downside. Currently the 12 hour does have the drag, but as you can see, that drag has played out already. Okay, over here. Now what we're going to go do is we're going to go look at 2-day, and I'm going to switch off some VRE levels, and I'm going to put on some reverse wave trend levels. reverse wave trend. Usually it takes a minute to load, but these things are quite good for higher term time frames. Let me pop it back on the 24 hour. So here's your daily mean, or daily mean, your daily VRE, your daily reverse wave trend mean. Close above here, you'll look for continuation. Close below this and you'll confirm bearish mean reversion to the downside. There's some big orders coming in at the moment. Let's go have a look. You see on the 5 minute if there's continuation through this. Yes, there is. Let's go see if we've hit a VRE level or we're waiting for a reverse wave trend level. Reverse wave trend mean will be in somewhere here, I'm guessing. Okay, there we go. Okay, reverse wave trend mean is down. We're going to wait for an initial pullback on next print. Does it mean that the candle goes lower than this? We don't know yet because we have a little bit of sideways, but it doesn't go down if this little blue line goes blue and we're negatively correlated. It's going to add us positive drift, which will keep us up above there. So we're targeting 3705. Okay, 12 hour, 24 hour. Oh, something biting me here. Mean reversion we've seen positive, so it needs to close above weekly in order to not get that wrecked. Okay, we've left our reverse wave trend on our daily. On our daily we've left our reverse wave trend, something we've been looking at for quite a long time now. Expansion positively correlated though, so that is the negative drift that's pulling it down. Failure from here, you want to go visit 30 cents. By the time it gets there, it might be 29 cents where this orange line is. 3-day expansion, that's good. We had a mean reversion play happen when we last looked at that. That's cool. Expansion to the upside, sloppy chips. So even if it does have a run, it's going to have a hard run, which we observed yesterday. Harder time trying to break this higher high over here. All right, so it might have to set in a hidden bull div in order to get us up to 42.42. 5-day mean reversion coming in, wanting to confirm, but this is going to go sideways. Why do I say that? Volatility is contracting, all right, and both of them are negatively correlated, but our return oscillator is not facing up. Okay, general idea is close above this previous open, and you might have enough steam to negate that on the next print, this little chop to the downside. Close below this and you'll see the next candle will naturally want to deny bullish mean reversion and can continue down. We're going to put it on the 7-day and then I'm going to whip it up contraction, positive drift. That's sort of what's keeping any selling pressure up out of here. 14-day internet is banging. Contraction, negatively correlated, that's your float up. 21-day on Poloniex, XRP USDT. 21-day on Poloniex. There's the tag. Okay, cool. That's beautiful. 21-day contraction. Was negatively correlated. It's going to make a nice little doji, alright? Hey, dojis are going to be very risky in a time like this with regards to an outlier. But given that it prints a doji, if you're looking for continuation, next contraction, we're going to go sideways. Alright, we're going to go sideways. And that's going to help that turn back around. When this expands, then we'll look to break through reverse wave trend. But you can generally see any candle closes above 3912, you will look for continuation to the upside. But it gets very sketchy, which means it's going to run really quickly, and your target being 16074. 21-day. Let me double check what she has to say. There you go. So 21 day is going to back this outlier event. It's going to back this outlier event. Mean reversion play happened down here, hitting its outlier event. Obviously you can see it got scalped, but we have positive drift in the book. Let me just throw up BTC USDT so that you guys can see that BTC go down, XRP go up. Shannon, hey Shannon, BLX, will BLX help me out? BLX. So as you can see here with Bitcoin, what we have is volatility going down, and price action is positively correlated to that. So it's going to have a shitload of negative drift coming through the book. So that's something you're going to have to keep an eye out for. There you go, negative drift again, 5-day. Negative drift again, not looking healthy, Bitcoin. Sideways on the 3-day because it's had its expansion phase, but the next best phase will be positive drift in like 6 days time. The 2-day There you go, same thing, 2 days say down. So these higher term time frames are saying down for Bitcoin. Let's go have a look at XRP BTC, and I want to load up a cone in this region. Swing, swing. Is it alt season, guys? Just in the back of the books, huh? Hiding away. Oh no, I deleted all of them. I have to go look for a new flash. There's our new flash. What are we on? That's the 2 day. I want to do a 15-minute. Sorry about that. I thought I'd just clean this chart up. But we have a flash down here. There we go. Easy peasy. Lemon squeezy. Let's put up our distribution cone. Thanks, reverse wave trend. And that looks like it will be minus 25. That will be 338. Roundabout. Let's have a looky see. Are we on the money? No. 300. Oh no, 3110. Let's get closer. Okay, cool. Perfect. Nearly. 2 more. Back. Cool. Now we're just going to watch this distribution cone play out. Okay. Over here, what's coming in on XRP USDT? We have some downward pressure coming in at the moment. We're going to be hitting the red line. Oh, we're going to be hitting red line on VRE level on our XRP USDT. So general idea is it wants to mean revert to the orange line that's all the way down here until we get new 15-minute flashes. So this is currently the new trend until stated otherwise, which is up. Let's see, we have 19 and we ended off at 18 somewhere here. Alright, so failure at any one of these bands and you'll look for continuation to the upside or to the downside. Okay, so currently it's wanting to break through to the upside. Let's go have a look at our 15-minute just to see if there's some power and legs behind it. Booyakasha, booyakasha, booyakasha. Outlier event is happening. Close above. Probability cone, expansion positively correlated, VRE levels, no VRE levels yet. Given we are running all the way to the upside here, I think a good failure point to test lower lows would be at daily mean. As we say, daily mean are the magnets, as you can see here. Let's go have a look at our reverse wave trend. I'm going to drop this back baddie from 21 day. Please help me. Nice. So we have contraction. This is sideways though, but we've gone through a general phase of contraction. In volatility was negatively correlated, and that is the pure reason why we have positive drift in the market picking up the book. So 21 day is mean reverting to the upside. We have had enough contraction candles on the way down here for the next 21 day to match that red flick up, and then you have your next ebb and flow of volatility in. But because Pearson correlations are so far away, if this one prints red, the next candle's definitely going to want to pull back in and then look for continuation to the upside. 14 day. So Bitcoin not looking so healthy. That helps with these outlier events that's happening here. Expansion to the upside. This is still sideways, given it can close as a doji, just because Pearson correlation, both of them haven't mean reverted whilst red. But this says sideways. So it's a big-ass candle, no continuation until stated otherwise on the 14 day. Let's see what can help flip Pearson correlation around. So we have 7-day contraction, whilst in trend, and positive drift has a trend which backs its mean reversion here. As you can see, pretty powerful place to set that div in. That will be playing out here. 5 day, can't deny the 5 day it's work. 5 days looking like it's had its extended rally. Given that we just observed the 21 day and waiting for the next print pullback, this could be that timing. Losing its trend under contraction was positive correlation. Could maybe set us back at 1721. But that is the quick wick down to 1721. Okay, contraction negatively correlated negates that time frame we just looked at because you will have positive drift. Now you have contraction negatively correlated, positive drift, mean reversion outlier, red flashes and off, 2 days kicking it. Contraction moving into positive drift. Next 24 hours closes in 6 hours time, and that looks like it is wanting to trend. So first Pearson correlation goes in. 6 hours going to print, the 24 hours going to print sideways initially. So by Wednesday we'll look for continuation. Contraction negatively correlated, that's floats up, which helps deny this bearish mean reversion to the outside. We have hit outliers and we are done with red. So let's see what's going to back on the lower term time frames to keep that bullish. So I'm going to be expecting from 3 hour below maybe some dumping signals. Contraction, negatively correlated, positive drift. Next two candles should look like it's contracting, and these will obviously stay in the negative side of things, which will add to your positive drift, which will definitely kick that through back up into the mean. Right, outlier events happening, super scalper coming through. We are looking to expand on the 3 hour. Super scalper hits mean reversion phase. Let's put up some VRE levels. Hits mean reversion phase, and you look for continuation. So the general idea being here is you close the next 37 minutes above daily mean, and you will have significant positive correlation under expansion with a new trend starting at the top of 1896. The 90-minute is also going to be mean reverting. Expansion to the upside. This does look like 1896 will be in the book within a couple hours from now. Contraction positively correlated. There we go. We're starting to get cut off here, but it's fine. Those high term time frames look like it will negate 45-minute. Bearish div hit trying to come in. Outlier event. So if the high term time frames do not, then you'll see a big problem come through the books. This next candle, what it has to do is be bigger than half of this. So if I has to add those together, so I'm going to say the next candle has to be like 20 satoshis bigger than so it will have to be about 2/3 the size of this candle to the upside, and then that will confirm your continuation through the daily mean. But if it's not, you're going to expect it to be scalped at the daily mean. Contraction, sideways, sideways. Okay, reverse wave trend. Let's have a look. You see 15-minute, and then we're going to put on the I want to put the cone up. Have we got some flashes? We've just played it out. Put the cone up. Boyakasha. Boyakasha. 15-minute. Close outside. Look for trend up into this band. Close below. Looking to trend into the mean. Might get a little bit of triangle action here. As your triangle action starts to happen, it's going to lift this reverse wave trend. Before you break out, you want to tag it and then set that bull div to get you up into this region. I hope this was helpful. If you do like it, please do like and subscribe. Pow pow. Thank you for watching. Thank you for your time.